My name is Don Schweitzer, and I'm the Business Development Officer at Day Air Credit Union.
I'm Bettina Bushimi, and I'm the Business Development Manager at Day Air Credit Union. And today we're going to talk about high-cost financial services.
So let's start off with a definition. What is APR? Well, APR stands for annual percentage rate. And what it really is set to do is allows you to go out and shop and compare apples to apples, oranges to oranges. So when you're looking at a rate at Day Air Credit Union versus Wright Pat Credit Union versus Fifth Third, you're going to be able to say Day Air is charging you only 5.9%, Wright Pat at 6.2%, and Fifth Third's at 13.2%. You're going to be able to compare those.
So it's going to be apples to apples. Well, let's talk about lending a little bit. You've all heard of credit score and how to get credit. So if you've got a good credit score, you've had a history of paying your bills on time, your credit score is higher, you're going to be able to get prime credit. And so that's when you hear, I can get a vehicle for 2.99%. And I can do it for 60 months and I don't have any trouble getting credit. So prime credit is your regular bank or credit union lending to proven credit-worthy borrowers.
But what's the opposite of that, Bettina? It's subprime. Now, don't worry, just because it's subprime doesn't mean you're a bad person. It means your credit score may not be as high as others. Typically, less than 600 though. And so what does that mean? It actually means that you're not going to get the best rate. And in fact, what's going to happen is that you're going to be paying more than likely a significant higher rate.
And here we want to make sure to talk about the fact that not all subprime lending is predatory lending. There's two different things. So subprime lending just simply means you're paying a higher cost for borrowing money. And that might be like your buy here, pay here kind of lot. That's what subprime looks like. But predatory lending is actually unfair, deceptive terms for some lenders who actually are preying on people. We've got several places that you can go ahead and get help if you feel like you've been taken advantage of.
Right, and that's the Federal Trade Commission or the FTC. You can either go to their website to ftccomplaintassistant.gov or 1-877-FTC-HELP. So those are two places you can go to obtain assistance when you think that you may be a victim of predatory lending.
So let's talk about what these high-cost financial services are. We've all heard bank, we've all heard credit union, but sometimes we need a little help and we don't know where to go. So I'm thinking in particular of the payday loans. I need to borrow money, my car broke down, I need to borrow $200. I'm maybe going to get that for the 2 weeks. So from paycheck to paycheck, I actually am going to borrow $200 and they're going to say, hey, you know what, that's a fee of $27. So I say, okay, I'll pay the $27. So I really don't get $200, do I?
No.
Minus 27.
Correct.
So my fee has to go into that APR. Mm-hmm. And it's kind of incredible what it does to an APR because over a year's period of time, that can be over 400%.
And you know, Bettina, the average loan at a payday lender is about $360. The average fee is around $50. And I hope you're sitting down for this. The average APR is almost 400%. And you know what, Bettina? I did a little bit of research myself. Do you know the highest APR that was quoted on a payday lender's website?
It could have been more than 400.
You know what? It was over 1,000%. So if you think about this, if you come to me for a loan and I say to you, well, I can get you that $200 or that $300, but I'm going to charge you 1,000%. How are you going to look at me then?
Yeah, I don't think I would be interested. You know, another place that I think of when I'm thinking of high cost financial services are some of those check cashing places, and even some of your local grocery stores. And what I'm thinking is if I've got my paycheck for the week, and I'm going to go in there and pay maybe 2% of my check. So for a $1,200 paycheck, I may be paying them $24 just to cash my check. There's other services available.
And free services. We at the credit union, guess what? We don't like fees. Fees are bad fees. So why do you want to pay someone $24 every single week or $24 every 2 weeks just to cash your check? There are free services available to you out there. But there's another one, Bettina. Rent to own. Now, it may seem like a good deal, but let's think about this. When you rent to own, you're paying generally on a weekly basis. And at the end of the term, when you actually get to own that 72-inch high-def big screen TV that you went there to get for the big game, you're actually paying almost twice or 3 times the normal cost.
Yeah. And it's worth noting, it doesn't build your credit here. We'll talk about credit in another time, but it really doesn't help you with your credit.
It does not. And you know what else? Payday lenders typically don't report to the credit bureau either.
Not unless you don't pay them back.
God, that's true.
So there are a few more out there. Expensive credit cards. I had somebody ask me the other day, well, I got a credit card offer in the mail and I thought that my credit was really poor. I said, did you read the fine print? A lot of times when you're getting an offer that seems too good to be true, it's too good to be true. They had an annual fee that they had to pay every year just to have that credit card. It had a shorter grace period. So where normally you have a month to pay your credit card bill off, this had like only about 10 or 15 days. So they were actually charging interest more than just monthly. It had a really high APR, annual percentage rate, and there was even an application fee just to put it through.
And did they have an annual fee to?
Yeah.
Yeah, so every year you had to pay that cost,
Exactly.
right?
Exactly.
Guess what? We at the credit union don't like fees. There are credit cards that are out there where there are no fees like that. There's another one. It's similar to a payday loan, auto title loans. And they say in the commercials, I don't know if you've seen these or not, we're going to loan you $500 on your car, and guess what? You get to keep your car.
Until you don't make your first payment.
Yeah, then they're going to take it back. And so when reality, just like a payday loan, you're giving your title up for collateral, but you're paying that 25% per month plus fees. The APR is going to be well over 300% again.
Exactly.
And you're putting your car at risk.
I think it's really important to say that so many people get caught up in these high-cost financial services. When we're talking about the payday loan or the auto title loan, you really didn't have the money to begin with. You borrow it, you have to borrow more to pay it back again. So the snowball effect happens. And I know lots of people who have gotten so stuck in, they don't pay one payday lender, they then have to go to a second, even a third. We're asking you to come find help.
So let's kind of give you an example here of rent to own. So let's just say a DVD player, $250, right? And you're going to pay that on a weekly basis. So the amount financed on a loan for that DVD player, $250, or rent to own, $250. Monthly payment at the rent to own, $57. Monthly payment on the credit card would be $16. Number of months, 18. Number of months for the credit card, 18. So the finance charges on the rent to own, $772. Total interest you're paying on that other one is only $41. APR on the rent to own, 265% compared to 19.8%. So you may say to yourself, credit card at almost 20%, are you kidding me? Take a look at the difference. So with the rent to own, you paid almost $1,022 compared to $292 with a loan. Almost 4 times the difference.
So what are some solutions? Okay, we've talked about everything that there is bad out there about high-cost financial services. So one, of course, is coming to your credit union for help. But there are other solutions that you can do is maybe, hey, increase your income. What about a second part-time job? Is there something you can do on the weekend, or maybe turn your hobby into income?
And Bettina, is there anyone budgeting out there? Look at your expenses, track them, find out where you can cut. And if you can cut out that mocha mint double chocolate latte and going out to eat every single day for lunch, guess what? Now all of a sudden you can eliminate some of those expenses and debt.
What about selling an asset? Maybe having a garage sale. Maybe you have something, I don't know, exercise equipment you haven't used in a long time. Maybe it's time to let it go. Also, stop using credit. Don't keep snowballing your credit over and over again.
And never pay the minimum amount on your credit card. Pay more when you can, but never go to your preset amount on your credit. Pay more.
Another thing you can do with debt that you already have is paying the highest interest rate debt, or even calling and asking for a rate reduction.
And negotiating in some cases. Maybe if things have got so bad, maybe you should consider a reputable debt management solution. You got to be careful though. Some of these places you see on TV, you just got to be careful. So what I would suggest you do is ask your banking partner, where should I go to help me with a debt management solution?
And you mentioned banking partner. That's the whole idea here, is that if you get in trouble, you should have someone to go to, a traditional financial service like a credit union or a bank, where you can go and talk for help.
So just to give you an indication, what is the difference between a credit union and a bank? So let me start off with a bank. Banks are for profit. What are they in business for? They're in it to make money, as much money as they can. Don't get me wrong, profit is a good thing. You do not want a bank that is losing money. However, that is their main focus.
Well, credit union is not for profit. So our whole outlook is different. We are owned by our members. We're not for profit. All of our profits, which we do make money, of course, and we're very safe and strong, but our profits go back to our members.
And at a bank, the owners are the shareholders. All right, so where does the dividends, where does the profit go for a bank? It goes to the shareholders. Now, you could be a shareholder and a customer of a bank, but most people are not. So the customers don't necessarily reap that benefit, but in the case of a credit union, they do.
Credit union is actually owned by the members. None of us own more or less. We all own the same amount. And all of the profits that are made by the institution go right back to us as members, as member owners, I guess I should say. And not only in interest, dividends, but also through services that we provide.
You know, a board of directors is, with a company, they're there to direct the company in a certain direction. The board of directors for a bank, they're paid. What are they paid to do? They're paid to direct the bank to make as much money as they can so that they have high profits that'll go back to the shareholders. What about a credit union?
Our focus is just different. Our board of directors is made up of our members. They volunteer, so there is no payment involved, but they are in place to help live our mission, which is to improve our members' financial well-being.
But Bettina, banks have checking, savings, loans, investments, mortgage loans, commercial deposits. Credit unions don't have all that, do they?
We have all that.
We have the same things.
Exactly.
Credit unions have the same things. And just so you know, we really need to apologize to you because we're biased. We work for a credit union. But you know what? One of the things that you can do to help out, another solution, is choosing to save. And is there anyone out there budgeting? Your first line item needs to be paying yourself first, which is saving.
Savings also is one of the biggest things because you're ready for a financial emergency. So if the car breaks down, you don't have to rely on a payday lender. You know you have that money put away into the side.
And so it's all about sacrifice, delaying that gratification. So you really want that TV, that 72-inch high def, right? Maybe you can save for that and also save a little bit of money or not spend as much. Instead of spending $4,000 at a rent to own, maybe you'll only spend $1,000 by saving. I'm Don Schweitzer at Day Air Credit Union.
I'm Bettina Bushimi with Day Air Credit Union.
Thank you for listening.